Hello, everyone. Welcome to the broadcast. If you're joining me, just give me a little hashtag live down below so I know that you are with me. I have my volume turned up. I'm ready to go. And we're going to talk about this market today. I think I have a bit of allergies, so I'm stuffed up. Oh, let me pause this. So I'm a little stuffed up. So if I sound a little different or I pause, it's because I can barely breathe. But we're going to work through this and we're gonna figure this thing out. It's gonna be great. Anyway, before I get started, I'm going to share this to my private group. And if you want access to the private group, it's just a group where we share and talk. And I give what I think is going on during the week. You get like real time analysis as to what's happening when we have big dumps and stuff like that. I think it just ends up being a pretty cool community and a pretty cool place to be. And if you're in the community, just comment below with what you like about it. So let me share that over, and then I'm going to get into the market update today and talk to you about where I think the market is, where we're headed, and an explanation for the current situation we're in based on what I've said in the past. So hopefully you enjoy this. I'm going to share this and we'll get started. There we go. Okay, so let's take a deep dive into just what the overall market looks like, and then we'll start looking at the market structure, and we'll start looking at why things are doing what they're doing, and ultimately what's really going on. So the first thing I kind of want to do is share my screen, of course. So let's look at CoinMarketCap. Basically, when you look at CoinMarketCap across the board, it hasn't been very good. So Bitcoin's down 14% in the last 7 days. ETH is down. The only things that really pumping right now are stable coins, which is not a good thing. All the big caps are bleeding pretty hard. There's nothing that looks great. Luna got hammered. There was a lot of FUD with Luna. It just got hammered. It got dumped below its all-time high. So everything is just kind of plummeting right now. It's not really the best situation. The good thing is stablecoins have been holding fairly well. We haven't seen anything really depeg or really fall apart. But I don't really have a lot of good things to say about where we're at. Things have really taken a beating in the last couple of days, I guess. Just looking across the board, not really anything that's actually performed well, whatever this coin is. Even when you look at DeFi, and typically when we have dumps like this, you'll see that the market just tanks. Everything goes because everything, when you think about it this way, the reason everything follows Bitcoin is because everything on exchanges has a pair to Bitcoin. And so that makes all of these assets correlated with Bitcoin across the board. And so if we wanted to see things less dependent on Bitcoin, we would want to introduce ETH as a pair. We would want to introduce other pairs, stable coins as pairs. So that way these things don't depend on the movement of Bitcoin so much. And that's the reason why Bitcoin basically dominates the market, because so many of these coins have the Bitcoin pairing, and that causes them to be paired with Bitcoin and move with the volatility of the big daddy coin. So let's look across the board. Nothing really good to look at here. When we go and look at the DeFi landscape, it's still it's not very good. I mean, everything's just money's flowing out. And when the market tanks, people get scared, money flows out. And when you look at Bitcoin and the market right now in comparison to the rest of the market, risk assets and like growth stocks and stuff like that are taking a beating. And we're kind of seeing if this is like short-term extreme volatility or if this is like a long-term trend that could lead to a recessionary period. But ultimately right now, we're really starting to see a lot of risk to being taken off the table. So that way people can kind of play the market by ear with where it's at right now. Even when I go into the chains, there's not really a lot of good stuff happening right now. I mean, everything's pretty much down across the board. Money's flowing out of DeFi. And so Terra was up to like 40 billion at one point until it got hit pretty hard. ETH is 116. Terra, like it's still fairly undervalued, which is ridiculous with where it's at right now. BNB still kind of sitting where it's at. AVAX is pretty undervalued. We've got Solana, Fantom, extremely undervalued. It's been getting hit pretty hard lately. So just a lot of money flowing out of the market as we go through this kind of period to where we are sort of dumping. And so one thing we want to look at with the Bitcoin chart, you're probably wondering where we're going and what we're doing. So what I did a while back was I mapped out this channel that we were trading in that was a pretty good channel to watch when we were pumping and achieving new all-time highs. But if you look at it, it ties into the bottoms here and the tops here. And so if you've noticed, what we've done recently is we fell through and then we hit the top of the channel, which is the bull market support band as well. And then we fell through, then we came up, then we hit the top of the 200-day moving average, got rejected. So like I said in my previous videos, basically what's going on here is And what I said was in the previous videos that if we can't get past this, we're going to get crushed. And guess what? We didn't get past it and we got crushed. So what happened was we basically came through like before. We've been rejected on this thing a million times, finally cleared through it. We came back to test. And when we did test, the good news was we actually were able to wick off of it. And that was pretty exciting because we wicked off of it. The other thing that I thought was pretty exciting was we had the weekly cross right here. So this weekly cross actually happened. And the last time this happened was a fairly significant bull run. So that was pretty bullish. But now that we've gotten crushed the last couple of weeks, what's happening is it's peeling over and it's going to test. And so what's going to happen this week is this thing's going to either test and fall back through and just cross again, which will be an invalidation of this bullish thesis, or it's going to hit and bounce and drive up, and it's going to give us quite a bit of momentum to continue on an uptrend. So that's going to be what to look for this week. The big things that matter are like the weekly and the monthly closes. So if we have the monthly close and we somehow come back up and this thing just rebounds and pushes, then that's a really good sign. Now, if we continue to just tank, then this thing's going to fall straight through and we're going to have an invalidated thesis on some of what I talked about previously, where we had this cross happen like back here and we had this bullish run. So right now it's kind of up in the air until the close of the week. It's early in the week, obviously. So we can see the previous times it's closed too. It's not necessarily always the easiest thing. So this time, and let me find the chart itself, but when we crossed back here, it was January. And so we crossed and then the exact same thing happened. It came up and then it just fell straight through. And so then we basically came back underneath the bull market support band, which is exactly what's happening right now. So looking at this. So what happened here was we cross and then we go up and then we come back down, we fall straight through. And so ultimately that's what we're kind of leaning toward right now. I know it's early in the week, so we don't really know till the end of the week, but if we do come, we've already peeled over on the MACD. So what could happen here is if we aren't able to sustain, which we've already fallen through this, we're already near this candle in terms of where we're at today. But if this falls through, then we fall through and we go low to a new low, maybe a newer low and maybe a higher low. I don't know, but we fall through onto a low and then we come back down. We wick off somewhere down at the bottom. We pass again. And then this time it actually went through. But what happened was, and remember, it actually crossed here in January 2020. We didn't really see the big peak until October, January, February, March, April, May, June, July. So it was quite a ways in the future that it actually happened. So we could see something like that where we have this period to where it's just like several months of sideways action. And then we find a bottom. And then a few months after that, we kind of finally clear. So if we fall through on the weekly there, that's a scenario that could likely play out. So we would say, okay, hey, we crossed, but then we fell straight through and we fell over. And then we kind of finally came back under and passed through it. We crossed again. And then we crossed again from about April till July. We basically moved sideways. And then from July till September, we had a little bit of a updrive, but nothing much, which is what happened here when we started to test this bull market support band again. We came through, we touched here, barely went over, and then bounced off and had the drive to actually move up. So when we look at that, then the result of that is ultimately what happened here in this first big peak. So could that be something that's playing out? Yeah, definitely. And what we're looking at here is if that were to play out, we would see this fall through, and then this at the end of the week would ultimately lead us down to who knows where. And let me turn on my rainbows. So what would probably likely happen is we'd probably go back down to like 35.9 and test that zone. And then that would either give us the bounce to drive back up, or possibly we fall through and we go down to like the 27 zone. I think the lowest Bitcoin could possibly go is like 21, because that's like the 200 week moving average. But what I'm looking at right now, and I'm not trying to be super bearish on this or say like the sky is falling and we're going to go that low, but what I am saying is if this thing falls through, we are going to go down and put another low. And likely what we'll do is, if you notice, we always wick near the bottom of this rainbow band here. So what'll probably happen is we'll probably wick somewhere above it, somewhere between 35.8 to like 36.6-ish is likely what would happen if we fall through and this thing is unable to sustain. Now, if this thing bounces and drives, then what'll probably happen is we'll probably push back up, and we'll probably come back up to test this 200-day moving average again. And then if we clear the 200-day, like I've said in the past, that gives us the bullish momentum to go on another big up drive. And if we are able to actually clear and hold, then what likely happens is obviously we test this zone, which we got rejected off of and pushed us straight through. But if we clear this zone, then that puts us on the trajectory to move back up to like this zone, like 70,000. So right now it's sort of the moment of truth. Does this fall straight through, and do we come down to retest this zone, or does this bounce off and we push back up and move on to a better domain? Where do I think we're at? I think it's too early in the week to tell. I do think we have a fairly decent dump currently happening, that it doesn't really have a strong wick. I don't really see a lot of reasons for it to turn around in the short term. So we may just dump sideways. I mean, we have this MACD cross on the 4 hour and we're coming back up. So we're going to need this to peel over and get some volume to the upside to actually see some good momentum happen. So right now, I think it's kind of up in the air. We're in a position to where if we can get a good wick, even if it's at the 35.5 zone, that would be wonderful, because then that can give us the wick to drive back up and retest it. The other thing that I'm kind of looking at for the monthly that I think is important to pay attention to, and that we may just invalidate in a couple of days, is looking at what we've been doing recently. So let me turn off. Actually, as you can see, we're sort of clearing these higher lows every month. So January, February, higher low, March, higher low. So what I think could possibly happen as well this month is we might put in, we're going to test whether or not we can put in another higher low. And so what that looks like is we have all these higher lows. And so what we're going to do is see if we can stay on this trajectory. And if we can stay on this trajectory, then we're probably in a pretty good spot as of recently. I mean, you can draw a support line, which I have somewhere up here. Maybe it's on this chart. Nope, that one's a disaster. But what we want to do, let me find the chart that works. So this is the one where I do the support. Basically, we've seen the wicks here. We've seen the wicks here. And so what we might possibly be looking at is we've got this recent higher low right here. So can we clear above 37.2? So will this thing come down to like, maybe even right here, 37.3, and put in just a little bit of a higher low? Only time will tell, and we don't really know until this monthly closes. Like if it stays right here and we put in a big wick, then that's pretty good, because that's another higher low. That's bullish. That means we're punching up very slowly, but we are punching up, which would be a good thing. Now, if this thing comes through and just blows past that, and now we put in a lower low, well, now we have sort of a bearish divergence that's pointed us towards going down, which is ultimately what we don't want. So kind of in a nutshell, when we're thinking about where we're at, what we want to pay attention to is, is this about to put in a lower low, or can we keep this higher low? Are we in a position to where this cross on the weekly happens? We'll find this out this week. I mean, this is going to fall through this week, or it's going to bounce off this week. It's right there. It's legitimately going to happen. It closes on Sunday, so we'll figure out there. And then if it does bounce, we're going to come back up and test this bull market support band, and that probably gives us the strength to drive through. If this thing falls through, then we can expect to probably dump pretty far, not down to 20,000, but we can definitely expect to have a good dump and to go down in the short term. And maybe that's putting us on trajectory for something like that happened over here, where we had the weekly cross fall through, put in the lowest of the cycle. So, I mean, put in the lowest of the cycle and then come back up after it puts in the lowest, and then pushes through and then goes sideways for a few months till it puts in the new all-time high. So that could be what we're doing. And that kind of that's like the 2020 was that big like COVID dump. So maybe that something like that won't happen, but it is interesting how close it is. If we do go to Bitstamp, let me find a better chart. If we go to this one and we look at the 2013 cycle, you can't even see it. It looks so little. We did have, let's see if we had some similar structure. So we did have, like we had previously, we had this peak in 2013, a couple of wicks off the support band, and then we ultimately fell through it. And then as you notice here, what happened was we fell through it. We tried for, this is the weekly 1, 2, 3, 4 weeks. Then it finally cleared through. It came up, then it went sideways for 1, 2, 3, 4 weeks, fell all the way back down. And then when it fell all the way back down, it actually wicked up and put in a new all-time high. So we could have a structure like that possibly coming up. When we look at the MACD on this situation, we obviously fell through here, and then we had this cross to the downside, then we had this cross over, and then similar to what I was talking about earlier, what could happen is, we'll notice how as we crossed, this thing did peel over like we're doing right now, and then it bounced, and when it did bounce, that gave it the strength to put in that new all-time high. So notice how that bounce right here was this extreme wick where it went down and back up. Can you imagine? $85 Bitcoin. But so it pushed through, and then when it went to bounce, it doesn't seem like it was that significant, but in reality, it was 134, wicked all the way down to 85, and then it hit that bounce and then drove out. So that could be what we're experiencing as well. And if we do that, probably gives us the strength to come in and clear something significant. So let me know if there's any questions. Let's see if there's any in the comments, but let's look at, and another interesting correlation that we want to look at here is notice how the US dollar has been, it moved sideways until about March 31st. And now the dollar has been strong and it's been moving up. And at the same time, if you notice, Bitcoin has not been as strong. Let me find the actual coin now. So then you notice Bitcoin, oops. I keep moving my lines. So as you notice, ever since that March 31st, Bitcoin's been sort of getting crushed. Let's go back to the daily. So March 31st is when Bitcoin started to like trend sideways here. And then April 5th, it started dumping. When you look at the dollar dumped until about March 31st. And then the dollar started really pumping, and the dollar has been pumping lately. And so there's definitely a correlation between the dollar pumping and Bitcoin dumping, because that's kind of what we're experiencing right now. The other thing we want to look at is Bitcoin sort of, it's fairly tied to the market. When we look at the Dow Jones, similar situation happened here. We essentially cleared up, fell straight through, and then we cleared up again. We passed it, even past everything it needed to get through. Then it fell through, and then it got stuck, and now we're stuck below and it's dumping. So they all literally pretty close to what's happening with Bitcoin. Bitcoin might look a little stronger. So that's kind of the situation. It's following the stock market essentially, and it's kind of got this inverse relationship with the dollar. When we look at ETH was looking bullish. It was looking strong. It was hitting that 200-day moving average. It actually cleared through. It fell through, tested, pushed up, and it was moving sideways across this top support line. And then it just fell straight through as Bitcoin kind of started to collapse. And today we just basically lost it all. It has a decent wick right here, which doesn't look bad, but just like we always say, ETH's following Big Daddy Bitcoin. If ETH2 is scheduled to merge in June. If Bitcoin's continuously dumping like this, ETH won't have any capabilities to sustain a drive up. If Bitcoin can at least stay sideways, then it puts us in a situation to where ETH can have a pretty big drive, because ETH2 and the merger should put ETH in a position to really drive hard. But if we're in this bearish period like we are right now, it's going to be hard for it to drive against all this momentum against it. The other thing that we looked at last time that I wanted to revisit here was the altcoin market with respect to Bitcoin. So looking at Ethereum with respect to Bitcoin, this actually still looks really strong, which is actually impressive to me, because of how much like alts have been just hammered and crushed today. So when you look at the market, we cleared above this resistance line, and then we fell through, and then we cleared through it, then we fell through, and then we pushed right back above it. So what this tells me is our alts with respect to Bitcoin, or in relation to Bitcoin, are looking a lot stronger than Bitcoin itself. You could kind of look at this little M pattern and say they're about to get tanked and crushed, but for the most part, they've sort of held exactly where they need to hold to do well. And when we look at the weekly, we've been stuck in this trend with the alts since like May 2021. And so even right here on the weekly, this looks fairly good. I mean, we wicked across the bull market support band, the 200-week moving average or 200-day moving average, and then we pushed all the way up and we stayed above this. If we fall below this, probably going to go back and revisit down there. So that's fairly bullish on that environment. Let me know if there's any questions. Let me stop sharing for a second and check if there's any questions in the comments. So basically, and the last thing I kind of wanted to look at was a cool protocol, Beethoven. I think it's really neat. They have a lot of cool stuff coming out. They're a balancer fork, so they use similar technology to the same technology as balancer. But what I really like about this pool is you can have like a 20% and an 80% instead of a 50-50, which reduces like impermanent loss. So if I wanted to pair US dollar coin with Fantom, I could say, okay, 30% US dollar coin, 70% Fantom, which is going to give me a lot less impermanent loss associated with my position. But what I think is really neat about Beethoven are their boosted pools. So basically what they're doing is they're setting up these pools to where they have, let's look at this one, for example. They're basically setting up these pools to where, let's find the break. So the breakdown's here. So it's 19.60 APR off of, these are all stable coins. So you have a combination of US dollar coin, Frax, UST, and then US dollar tether. So they're all tier one stable coins. But when you look at how they're organized and what's cool about it is you put in UST, and then what Beethoven does is you essentially put in UST, US dollar coin, Frax, and US dollar tether. And then what Beethoven will do is they'll take your Frax, your US dollar coin, and your US dollar tether, and they'll take those and they'll move them into a ratio. So it's like a stable coin ratio. It's not like a 1-to-1, but it's a ratio to where and we can see it here. So there's a ratio of 232,000 US dollar coin and 1 million Yearn vault US dollar coin. So what they do is you put your UST in here, you put your US dollar coin, your Frax, and your tether in here. And then what they do is they basically deposit a portion of it into Yearn Finance, and they earn yield in Yearn off of those coins. And so the yield that they earn from Yearn, from say like US dollar tether, which is 1.54%, over here gets passed to you. So your USDT yield is 0.29%. They take a performance fee. And then when you look at Frax, 0.5% extra. So when you come up here and you look at Frax, 2.25%. So you have all of these coins in here that are not only just earning from the rewards, you're earning extra rewards on top. So you've got Frax paying out rewards, UST paying out rewards, and then an extra 1.27% from the Yearn boosted APR, because you're getting 0.5% of US dollar coin, 0.5% of Frax, and then a little under 0.5% of US dollar tether. So what they're essentially doing is they're yield farming this for you. So you're putting all this in, they're breaking this up, and then they're depositing it, a portion of each of these into the pools, and then relaying that back in. So you earn. You earn swap fees, like it's auto compounded back in. You earn Beats rewards, so you earn their token, which you can sell and reinvest back into this or use it, whatever. And then you're getting paid out in Frax and US dollar tethers. So stuff like that is pretty neat. I like the idea of these boosted pools because they're bringing a new concept of how to run a DEX around instead of dependent entirely on these like liquidity pools and swap fees and everything. They're moving into a place where they can actually earn yield and use some of that yield that they earn to fill the pools and keep the protocol running and going. So I thought that was pretty neat. Let me know if you have any questions about that, or if you have any questions about anything in general. I'm happy to help, and I will talk to y'all next